Welcome to Different Makes a Difference, where we discuss investment matters that matter to everyday investors. Join Odlum Brown's equity analysts as we examine pertinent topics in today's markets and look at things a little differently. Odlum Brown is an independent Canadian investment firm. We provide integrated wealth management solutions to help clients achieve their financial goals, and we've been doing so for over 100 years. Join us for some lessons we've learned along the way that can make a difference for the future.
Hi, everyone, and thank you for joining us. I'm Stephen Boland with Odlum Brown. Today, we're going to talk about healthcare. It's an industry of vital importance to us all in terms of our physical well-being, and it's an industry that can provide intriguing investment opportunities as well. For a long time, it was a wonderful place to invest. When I started at Odlum Brown about 20 years ago, I posted a few things on my wall. And one was a table showing the best returns by industry in the U.S. over the previous 50 years. And number one on that list was healthcare. However, the past is not always indicative of the future. And lately, healthcare has not been a good place for investors. Does that bring opportunity, or should it warrant caution? Today, we're going to talk about that with Stephen Zicherman, who covers healthcare for Odlum Brown. Welcome back, Stephen.
It's good to be here, Steve, and it's always fun to talk with you.
Well, let's start by providing a little bit more color. Healthcare is a broad term. What types of companies are we talking about when we talk healthcare?
When we think about healthcare, we really break it down into 5 categories. So we'll start with life sciences. Think of this as the science side of healthcare, things like lab equipment and supplies. The companies that operate in life sciences make tools and technology for health research. Think of a company like Thermo Fisher. Then you've got managed care. This is the insurance side of the business, and these are companies that help people pay for and access medical care. You've got medical devices, companies that make tools and equipment, everything from syringes to advanced technology like pacemakers, MRI scanners, and surgical robots. And then you've got biotech. This is a cutting-edge area of healthcare, companies that are very science-heavy, and companies that use living cells and genetic information to create new treatments like mRNA vaccines. And then you've got the largest cohort of healthcare companies, pharmaceuticals. They make traditional medicines that are usually chemical-based drugs like pills. Think of Advil, antibiotics, and cholesterol drugs.
And I think we're talking primarily U.S. and European companies here. Canada, we have a bit of a different system in terms of government funded and such, but we don't have a lot of big healthcare companies in general. I know when I looked a while back at the healthcare index in Canada, don't know if it's still the case, but there's a lot of marijuana companies. So we're talking a lot of big European and American companies here?
Absolutely. And yeah, I think that is still the case. We typically like to invest in our backyard. We just don't have many options to choose from when it comes to healthcare. So we are typically looking and investigating companies in the US and Europe.
And as Canadians, I imagine we buy a lot of these American products as well.
Absolutely.
So as I referenced earlier, over a long arc of time, healthcare has been a good space for investors. Why has it performed well historically, and what are some of the positive attributes that still exist today?
Yeah, I think there are a number of factors that contributed to a really good sector to invest in that would explain the chart that you had on your wall. First and foremost, you had aging demographics in the US, as well as global population growth. Now, within the baby boomer cohort, you had a lot of increased demand for things like medical services, procedures, as well as prescription drugs. And as a result of that, healthcare spending as a percentage of the economy rose over time. You had an expansion of government programs like Medicare and Medicaid. You also had a lot of technology and pharmaceutical innovation. A lot of people refer to the period from the 1980s to the early 2000s as the golden age of blockbuster drugs. Lipitor, Prozac, Plavix are great examples of drugs that created really predictable high-margin revenue streams for the pharmaceutical companies. Beyond that technology revolution, you had advancements in genetic research as well as innovation in medical devices. And at the same time, a lot of the players in the industry were consolidating, giving them pricing power. Hospitals and physician practices merged to gain market share, as well as insurers acquired pharmacy benefit managers. So overall, you had a bunch of companies that had really good business models that were protected by patents ensuring a pretty good period of high profitability.
Is that still the case today? Are these still advantage businesses with lots of tailwinds? And I ask because performance lately has not been good. In recent years, healthcare stocks in aggregate have languished. Why is this industry now underperforming?
I think things have changed, but they've changed more slowly. And the one thing that I'd point to is pharmaceutical R&D, research and development efficiency. It's been going down because the cost of developing a new drug is going up. There's a law called Eroom's Law. And what Eroom's Law refers to is that the inflation-adjusted cost of developing a new drug has doubled every 9 years. So as it's become more expensive to build something in-house and bring it to market, as it's become more expensive to design and develop new drugs in-house, a lot of healthcare companies have looked to acquire outside to fill the gap. And returns were lower and lower. So these companies were paying prohibitive prices at some point, which locked in lower incremental returns. And the other unfortunate downside of resorting to large acquisitions to innovate, these companies had to allocate more and more of their free cash flow to paying down debt as opposed to investing in R&D.
So very real reasons why the sector has been under pressure. I wonder as well how much the U.S. ability to continue spending heavily on healthcare has impacted or might impact. And in the US in particular, healthcare is a huge part of the economy. And there's questions around the high prices being charged. There's companies that maybe there's been some headwinds on profitability, but healthcare companies by and large are still very profitable businesses. There's competing priorities around how money is spent. What is the outlook for this industry given the Americans' ability to continue funding it?
That's a big question that we're trying to answer. There is no answer. It's tough to assess, but I think that is the million-dollar question. How much more room is there for both the US public as well as private sector to increase healthcare spending? When we look at the statistics, we note that personal consumption spending on healthcare as a percent of the economy rose at a pretty good rate from about 5% in 1976 to 11% in 2008. But since then, it's really flatlined. And if you look at the chart, that same trend is true for national healthcare expenditures. So for a long period, you had US healthcare spending increasing or consistently rising as a percentage of the economy. But for a country like the US that already spends more so on healthcare per person than anybody else does or any other country does, we wonder if there's a threshold beyond which it can't afford to spend much more. So we're not in the business of trying to predict when a trend will stop and start. We're really trying to observe what's happening, and we want to assess what the risk and reward is.
Okay, so thinking of risk and reward, and certainly right now, investors are seeing risk in this sector, which is why the sector has done somewhat poorly. But out of favor can also mean opportunity, and it's part of the reason we call this podcast Different Makes a Difference. You know, the valuation multiples for a lot of healthcare companies have come down a lot and are now trading at a pretty big discount to the broader stock market. Does that mean opportunity, or is there a reason to remain cautious?
I think there's a little bit of both, but we would still side probably more on being cautious, as really nothing is certain. And there seems to be a lot of support for lower drug prices, as well as changes in the regulatory environment. And overall, healthcare is a really complex, complicated to invest, and we want to be as humble as possible to begin with. We would note that there are times in the cycle where patent cliffs can be concentrated. A patent cliff happens when a drug company's patent on its best-selling drug expires. So when we look at companies like Merck, Pfizer, and Bristol Myers, they do trade at discounted valuations, but they have a very large percentage of their business, including their revenues, that's coming off patent and will be facing very stiff competition by generic players who can offer similar drugs at much cheaper prices. So we have some overarching concerns with respect to industry headwinds.
So that's interesting on the patent cliffs for pharmaceuticals, and understandably so, a reason to be somewhat cautious. Profits might not be what they were in the past. We talked earlier about the different parts of healthcare. There are opportunities beyond the pharmaceutical space. The industry in general has been under a lot of pressure.
Yeah, that's a Great question. And what we've observed is that there's other parts of the healthcare market have struggled too. The biotech sector is trading at a pretty big discount to the market. I think there were a bunch of biotech IPOs in recent years that have struggled to perform. Maybe they came out at really high prices. The managed care industry is struggling. Companies in the managed care sector are having to deal with rising medical costs, as well as are facing lots of regulatory and legal pressures. And then finally, we mentioned life sciences before. Some of those companies have struggled. They really benefited from COVID and a boom in demand. And now they're dealing with the other side with demand decreasing, as well as lots of talk about US federal funding cuts to really important institutions like the NIH and the CDC.
Sorry, what's the NIH and the CDC?
The NIH is the National Institute of Health, and the CDC is the Center for Disease Control.
So sounds like reason to be at least somewhat cautious and at the very least to be selective. And you always want to be selective. And even today, despite some of these concerns, we're finding opportunities in spaces. I know there's healthcare stocks that you like and recommend. Tell us about some of those names.
Sure. We talked a little bit before about life sciences. And one company in the life sciences group is Thermo Fisher, a company that we consider a really high quality, one-stop shop life sciences company. Now, they make lots of equipment and supplies for labs, but they also face some pretty significant headwinds, which has resulted in different disappointing performance. But we think that the road ahead looks pretty good. Some of the factors that have impacted Thermo have been weaker biotech funding with rising interest rates and tightening in the credit environment. It's been difficult for some smaller biotech companies, so they've been forced to cut some spending. Tariffs and all the issues around tariffs has impacted Thermo Fisher, as well as an economic slowdown in China. There's been some tougher selling conditions for Thermo in China. But despite a lot of those issues, we're still optimistic. We think the future remains bright. A lot of the headwinds that we've just discussed are more macro-related. Those issues tend to be cyclical in nature. These aren't self-inflicted issues for Thermo Fisher. We think macro issues can improve over time. As well, what I think differentiates that company is they have a contract and manufacturing business. Now, Thermo's considered a key and trusted partner within the healthcare industry. And as part of that relationship, they've strategically acquired contract development. And again, going back to just dealing with the difficulties in developing new drugs, having a manufacturing development business in addition to their existing business helps their clients.
And Thermo's had a tremendous track record of success over time as well. And I might add a name as well, and it's Innovis. And some might wonder why I'm talking about Innovis. I cover Innovis. I've liked it for some time. And it used to be part of an industrial conglomerate. There was a welding business and a medical device business, and they ultimately split into two companies. Innovis being the medical business. They sell orthopedic products, so knee braces and physio equipment. They sell surgical implants for knees and hips and shoulders and feet and ankle. Terrific management team, really good at both operations and acquisitions. And you don't always get those two combined in one management team. It's a business that's growing faster than the market. They've consistently taken market share. They've done some big acquisitions recently, which has perhaps weighed on the stock to some degree, but has really positioned them for good future growth as well. And the stock's been a pretty lousy performer. Unfortunately, we've been recommending it during that lousy performance, but I think it just makes the stock look really cheap today. I think they've done a lot more good than what investors are giving them credit for. And just like Thermo Fisher, quite a bright future there. I want to close by touching on GLP-1 drugs, anti-obesity drugs. We all see the Ozempic commercials. I'm sure we all know people on these drugs. Some are calling them miracle drugs. People are losing significant amounts of weight on these drugs. And there's studies showing that they hold promise beyond just weight loss as well. It looks like it could be a huge market. Is this an area that holds intrigue?
Absolutely, Steve. We talked a bit about an era for blockbuster drugs. I think that GLPs will be a blockbuster category of drugs, and they've gained tremendous widespread attention for their effectiveness with regards to not only weight loss, but treating type 2 diabetes. So GLP stands for glucagon-like peptide. And this is a drug or a group of drugs that are designed to mimic a natural hormone in your body that helps you regulate your blood sugar and appetite. And there are really two big players in the GLP space, Novo Nordisk and Eli Lilly. You might be familiar with Ozempic. Novo is the one that sells Ozempic. Lilly's GLP drug is called Mounjaro. It's really incredible when you look at the weight loss that are associated with these drugs. The studies show that Novo's drug can lead to average weight loss of about 15%. Eli Lilly's drug appears to be even more potent, generating an average weight loss of about 20% at its highest doses. And nothing comes close to this outside of bariatric surgery. When we think about this group of medications, it's really incredible. But we also want to acknowledge there's some challenges with these drugs. They're super expensive. In Canada, if you're paying out of pocket, Ozempic generally costs $200 to $300 for a monthly supply. Wegovy, the higher dose version of Novo's weight loss drug, is estimated to cost about $400 a month, and Mounjaro can be even more expensive at $400 to $530 a month, depending on the dosage and pharmacy. So we're trying to wrap our heads around what the long-term opportunity looks like while also factoring some of the risks.
I think we could have a full podcast just on GLP-1 drugs. Those companies you mentioned, Novo Nordisk and Eli Lilly. We could probably talk about broader implications for food companies and companies that sell fitness memberships. It's a really interesting space, so perhaps we'll have you back on at some point to talk about it in more full. But thank you for being here today, Stephen. I think that was a good discussion. Healthcare is an industry of incredible importance to us all. It's also an area that can be good to investors, but that has not been the case recently. We like to look for opportunity in out-of-favor areas, but we have to consider some of the very real challenges facing this industry as well. There are names we like now, and it's certainly an area we'll be keeping an active eye on. As always, thank you for listening. We hope you enjoyed the podcast. Be well, and we'll talk again soon.
Thank you for listening to another episode of Different Makes a Difference. Just as every individual is unique, so are your financial circumstances. Be sure to talk to your professional advisors for advice related specifically to you. Our podcast is for general information purposes for Canadians only. The views expressed are those of the presenters and may not reflect the opinions of Odlum Brown. Be sure to check out our full disclaimer and subscribe to the podcast at odlumbrown.com/differentmakesadifference. Odlum Brown is a member of the Canadian Investor Protection Fund.